Morning, everybody, or good afternoon, wherever you are. My name is Mark Eckstein. I'm the ESG Director at CDC, and I will be the facilitator for today's webinar. Before we get going, I wanted to set the context a little bit about what we were trying to achieve by working with Ergon to produce this guidance, which we think is really important and timely. It aims to build a stronger and more consistent alliance for responsible investment responses to the corona crisis. And at its heart, it is about how are we most thoughtful and most mindful about protecting workers from retrenchment. This is recognizing that in some instances, we are going to be working with companies that do unfortunately need to retrench people, but there needs to be a very thoughtful and mindful process in advance of that that goes through a series of options which include advice, influence, and the use of financial measures to minimize that unfortunate final circumstance. And this guidance is not introducing new expectations. It is really helping to clarify the expectations of the IFC performance standards, which for many of you on this call will be familiar in terms of PS2. And over the course of this webinar, I hope that Alastair and Mac can help explain how we believe that can most effectively be achieved, but also then allow some time at the end for questions from you all. Now, before we get into the webinar proper, I wanted just to remind you that this webinar is being recorded and will be made available after the webinar. So, okay, let me introduce Alastair and Mac from Ergon Associates. Ergon Associates are a human rights and labour practices consultancy, and we've been working with them for 2 or 3 years now. Alastair and Mac were the 2 lead authors on this publication, and so we wanted to give them an opportunity to come live and talk to the report and to highlight pieces that they think are interesting and important. And ultimately, this is about how do we help investors think proactively about ways they can help companies to protect jobs through a combination of advice, influence, and financial measures. So look, I hope you enjoy the presentation, and I very much look forward to your questions. And on that, I think I'll pass over to Alastair, who I think is going to talk to the first slide. Over to you, Alastair.
Many thanks, Mark, and many thanks to CDC for the invitation. Greetings to all the participants from the 4 corners of the globe. So to start, we're just going to give a brief overview of the content and structure of the CDC Ergon guidance. We'll aim to spend around 20 minutes giving a summary of its key elements before moving on to address questions raised by participants. So the guidance itself is targeted to investors, debt and private equity investors, as well as FIs, financial institutions, and in so doing, it serves to complement the IFC interim guidance for clients on supporting workers, on which we also worked, which is aimed directly at companies. The guidance is very much a work in progress and recognizes the need to respond swiftly to very significant business challenges facing us all. Companies across a range of economic sectors are facing catastrophic losses, which threaten their operations and solvency, or millions of workers are vulnerable to layoffs or reductions in income as a result of reduced demand and enforced lockdowns. As we know, the impact is especially harsh on unprotected workers and the most vulnerable groups, particularly in the informal economy. The challenge for us all is to work with companies to identify a path for business continuity through the time-limited impact of the pandemic, which minimizes the impacts on longer-term recovery, which enables business to recover quickly and effectively when demand recovers. Now, what's at stake is finding practical ways to prevent economic contraction from becoming a human development crisis, particularly in the poorest developing countries. This makes big demands of us all to go beyond the norm, to find different ways of working, and to assume broader responsibilities for those who depend on us. That said, as Mark alluded to, the logic of the guidance is very much framed within the requirements of the IFC performance standards, which call for clients to identify and assess alternatives to retrenchment. Defaulting to retrenchment without adequate consideration of these alternatives will amplify the negative economic and health impacts of COVID-19. The guidance aims to check the reflex to default to permanent dismissals as the most appropriate cost containment measure. So the guidance focuses on how investors and FIs can work with companies to create options to exercise resilience and agility while also providing some form of security for workers whose livelihoods are under threat. It provides a basic framework for addressing jobs concerns systematically and effectively, and sets out options for companies through investor and FI efforts in advice, support, management engagement, and financing measures. Next slide, please.
Great. So I'll just quickly situate our guidance in sort of the broader universe of jobs-related challenges or questions that companies might face. So, really, I think just at the outset, health and safety is an obvious and key priority, as are sort of occupational health and safety measures, but they're not the focus of this guidance or this webinar. Same with sort of retrenchment at the bottom of the diagram there. Obviously, there are sort of responsible retrenchment considerations if the workforce is being reduced. Again, not the focus of the webinar or the guidance. There are sort of other supporting materials on OSH or OHS. IFC has released a guidance quite recently, and on retrenchment, I think European Bank for Reconstruction and Development and IFC both have very good resources to refer to. So in terms of sort of the middle bit, which we'll focus on, I think the thrust of the guidance, as Al alluded to, is sort of exploring what options do we really have to sort of protect or save jobs at a time when they're under pressure and sort of businesses are facing viability challenges. So, throughout this webinar and the guidance, we'll talk about different options. There's a job protection planning template, et cetera, et cetera, et cetera. And briefly, before I move to the next slide, I think, the right-hand column of the diagram, the performance standard reference really just reiterates the fact that, this is a new obligation. This isn't something that's completely unheard of. And we're sort of exploring job protection options and job protection plans in the context of alternatives to retrenchment, which the performance standards are clear on. So onto the business case, which is a related consideration, I think, sort of going maybe beyond the investor standards for some of these challenging issues. I think it's probably important for investors and FIs to sort of understand, what the business case arguments are at a time when companies might be sort of, as Al said, sort of reflexively sort of reverting to job cutting or reductions in the workforce. And I think, these business case arguments are out there and they exist and they're evolving. But the guidance sort of points out some of the key, the key arguments as we see them, I think. So, starting with the top left box, we talk about, ensuring that workers are key to continuity planning and what that might mean in terms of, retaining and continuing to develop skills, which might be relevant when businesses then move to sort of rebounding post-crisis, which may or may not give them a competitive edge. But we think that, strong continuity planning can avoid costs of rehiring or retraining, et cetera, which is crucial. And I think, there's a broader point that's brought up in the box below, which is, it's really about how companies will be judged, by how they react during this crisis. And that's, that includes treatment of customers, of workers, obviously, and other stakeholders like the community. So we're thinking maybe in terms of business goodwill broadly, where there are sort of positive and negative reputational factors, which are key. And another thing that's not mentioned in that slide, but is sort of an ongoing development, is the business case in terms of how, governments react. So, there are sort of policy proposals in sub-Saharan Africa which would, for example, require companies to maintain minimum wages or payrolls in order to access government relief schemes. I mean, these are obvious drivers for business, and are, they're context specific, but I think businesses have to keep this in mind when designing or considering job protection options. So, all in all, I think the key point here being that, businesses have to understand the business case. Investors and FIs have a role in communicating this business case, and all of that flows into the next slide that you're sort of seeing now, that one, on how investors and FIs can support. So, Al.
Thanks, Mac. And I think just to reiterate the crucial point that human capital is a key factor of resilience for recovery once demand resumes, and demand itself depends on the incomes derived from employment in large part. So jobs are central to both the business context, but also the broader macroeconomic challenges facing us. So the guidance looks at investors and FIs with a slightly differential lens. For equity and debt investors, the guidance sets out a broad process to focus on job risk in the portfolio, to identify options to prioritize and mitigate these risks to the extent feasible. This starts by integrating a jobs-focused approach into business continuity planning. To what extent does cost containment need to imply labour cost reductions? What's the cost benefit of immediate labour cost reduction versus the cost of subsequent rebuilding of human capital? And as Mac alluded to, what are the broader costs to company and investor? Now, we know that investor resources are limited, so we need to develop a framework for prioritising responses, identifying companies where jobs are at risk. This can include conversations with management to understand where business continuity planning has already identified pressures on jobs. We know that major sectors such as hospitality and leisure, manufacturing, business to consumer retail and construction are already hard hit. Equally, SMEs with more limited working capital or access to finance are under real pressure, which directly translates to job threats. When prioritizing job protection responses, focusing on vulnerable groups within the workforce is crucial. They may include, from a direct health perspective, older workers, in terms of vulnerability to economic shock, migrant workers, informal, contracted or temporary workers, and women are likely to be overrepresented in vulnerable groups and may be disproportionately affected by pressures on jobs. So, using the prioritization, it's possible for investors to target forms of advisory support in terms of identifying company needs, systematizing delivery of advisory support, potentially across the portfolio or with a sectoral focus, looking particularly at managing, at sharing examples of emerging good practice on human resource management responses, and where the equity position allows, using a board seat to integrate a focus on jobs concerns into broader business continuity planning. Where jobs are under threat in a viable business, it may be possible to identify financing options which can serve to mitigate the threat, but work needs to be done to ensure that the end use of funds is connected to the objective of income security through job protection, either through contractual means and or reporting. On reporting, the rapidly developing nature of the pandemic means that real-time information is vital. We understand companies' limitations on reporting capacity, but there is a strong logic to maintain more regular lines of communications on the impacts of COVID-19 on the company and its workforce to track the scale of the impact and create early sight of emerging challenges. Next slide, please. So for financial institutions, the guidance sets out a similar framework, albeit recognizing the different role of lenders and the different characteristics of lender portfolios, particularly the presence of very small businesses. Firstly, we focus on the responsibilities of FIs as employers themselves. ensuring safety and security of FI staff, including contractors. And this means minimizing transmission exposure for FI staff and identifying practical means to continue safe operations, including for loan officers. A further key role for FIs can be to provide a channel of accurate information to their clients. Some FIs are already repurposing their institution and their staff to organize health seminars, for example. FIs can also ensure that their business customers have access to up-to-date information on national provisions around tax relief, business relief, forms of social welfare for workers, which may determine the options which are available to the company to maintain job security. It's also worth considering cross-portfolio information sharing on sector-specific good practice. Financing options for FIs need to respond to the needs of the individual company. A blanket response may not be appropriate. Loan rescheduling for viable businesses may be considered. For critically important or high-growth businesses, it may be a question of increased capital injections for healthcare, for delivery, for essential services. And for non-viable businesses or those under extreme distress, forms of forbearance without impacting the client's credit history for future borrowing. Next slide, please.
So just briefly, before Al sort of elaborates on the specific options that we explore for job protection planning and guidance, I mean, just to set the context of it, I mean, I think the guidance is necessarily broad, somewhat generic, and will necessarily have to be adapted according to context. But I think there's some sort of key overarching considerations that we want to sort of consider when discussing job protection planning and, you know, what the alternatives are to full retrenchment. So I think the first and foremost, as we see it, is really understanding the national law, relevant frameworks, and government interventions. And I think, I mean, you know, on one level, a lot of this will be sort of determined by sort of COVID-specific government measures. And I think that in turn sort of defines what we can really view as available and realistic. So for example, you know, government support, as I mentioned earlier, might be predicated on companies maintaining a minimum payroll or minimum wages. You know, in other countries, I know in Latin America, for example, governments have limited the ability of employers to even dismiss employees for C-19 related reasons. So a strong understanding of government, or in particular C-19 specific interventions, is key. And there's a lot of work being done. I know the International Labour Organization is aggregating country policy responses. IOM, the International Organization for Migration, has a survey of government responses, obviously with a bit of a migration focus. But quickly, I think it's also important to understand national law just to sort of have a good sense of what's legally permissible in terms of our job protection planning options. So can we reduce pay? You know, what options are there for sick leave or extending care leave or modifying workers' contracts? Are there consultation obligations, et cetera, et cetera, et cetera? So all these things I think are quite crucial to our understanding of the options. Sort of a second consideration, I think, is on vulnerability, which I think, given our time, I think, you know, Al has mentioned it, but we're thinking, of course, of migrant workers, of women in the workforce, of, you know, precarious working arrangements, et cetera. We can discuss that later if need be. And then the third consideration is to do with consultation. So ideally, you know, there's buy-in from the workforce or workers' organizations where these exist. And, you know, there's obviously practical limitations in terms of how we conduct consultations where there is sort of a communicable illness at play. But we need to think about consultation in a way that respects health and safety of workers. And in terms of sort of specific measures which are addressed, I think, Al, you can go through some of the approaches in the guidance.
Yeah, so I mean, what are the options to if we can just go back to the previous slide, thanks. What are the options to secure jobs as part of business continuity planning? And to be clear, what we're talking about here is, you know, everybody working afresh, thinking afresh about what the options are in a totally unprecedented situation where all actors, state and private, are forced to think beyond the confines of previous precedent. Now, of course, when we're thinking about job security, then creating a workplace where workers can work safely and continued operation is possible is the starting point. And there are a range of measures which can be implemented in some workplaces. Equally, there may be scope to redeploy workers. Talking to one South African agribusiness last week, they brought forward some transition projects moving from forestry towards agriculture precisely because they know they will be viable business lines in the future, and they can use current worker skills and by bringing forward that program and do so in a safe, continued way. It may equally be possible to move higher skilled workers into full-time training programs. And of course, where mandated by law, then paid leave, and particularly sick leave and caring leave, are a very important part of this. One element of the guidance is really asking companies to think very seriously, where not mandated by law, what the scope is to establish forms of provision for paid sick leave and care leave. There are modifications which can be made to make continued work possible, but with some potential reduction to worker income around short-time working. That may be reducing shifts so as to reduce physical proximity in the workplace, reducing working hours or reducing the work week, including job sharing arrangements. Of course, these need to be implemented subject to legal requirements around employee consent and consultation. There may be scope to reduce or eliminate overtime. Then there are measures to retain workers on the books, so effectively on the payroll, but not necessarily active, with some form of partial wage payment or reductions. So rotating furloughs, so moving in and out of active operations, 2 weeks on, 2 weeks off, some form of furlough with limited wages or benefits, or combinations of paid and unpaid leave. And to be clear, what we're seeing now is a transition for those sectors and those regions more who were affected earlier on. Companies with a strong balance sheet were in a position effectively to put people on paid leave. Now the economic pressures are intensifying, and we need to broaden out what the range of potential options are. Now, of course, there are options which essentially don't provide direct forms of income to workers, but give the security of remaining in an employment relationship on the payroll. That's furlough, and of course, where that's supplemented by state wage subsidies or expansion of social security systems, that can provide some form of income to the workers. There may be scope also to connect workers to other labour needs within the local economy, particularly responding to crisis response needs, or to make connections to forms of livelihood support, including food subsidies, or indeed remaining in employer-accommodated accommodation. I think more broadly what we see is that there is scope to think about repurposing business activities and assets and services to meet emergency response needs, but also to maintain continued operation. And of course, there is a role for equitable sharing of the costs of this crisis in terms of moderation of executive remuneration and dividend payments. We also need to think about interactions with third parties in terms of payment arrangements with suppliers and contractors. Now, moving on to the next slide on financing options. So, given the limited fiscal headroom, the limited capacity of emerging market governments to provide financial measures aimed at job protection, although there are an increasing number of wage subsidies and other forms of support being made available, particularly in sub-Saharan Africa, companies will be looking to investors for financial as well as advisory support. In particular, there's an urgent need to provide additional liquidity for Africa's private sector. Where feasible, the guidance proposes that investors and lenders should adopt a flexible and supportive approach across the portfolio. And depending on the company's cash flow position, there may be a strong case to look for financing options to support the company to maintain its skills as a resilience measure to enable stronger recovery. So financial measures such as additional working capital or forbearance measures can have significant positive impact for workers in terms of maintaining ongoing operations and hence continued payment of salaries, paying for newly introduced paid sick or care leave, topping up salaries or provision of healthcare benefits for workers who are unable to work full hours, providing some form of income for inactive workers, or as a credit to retool manufacturing facilities or assets for the public good. Now, of course, from an investor perspective, supporting job protection through these measures must strike a balance between client flexibility to direct cash flow and ensuring that job protection is appropriately considered. That's one reason in the annex to the guidance you see a suggested job protection planning template, which is precisely aiming to support companies think through what their options are and to document that process. And of course, depending on an investor's relationship, leverage and role in company governance, it may be feasible to ring-fence funds for payment of worker wages or to encourage responsible governance with regard to use of new funds. Now, just to recap before we move to the question session, development finance and impact investment supports millions of jobs in the places where they're most needed, and development happens through these jobs. Protecting these jobs will be crucial to the ability of developing economies to bounce back. And what the guidance does is to look at the role of investors and FIs in supporting practical decision-making at company level, which can serve to translate these high-level objectives into real outcomes for workers. We recognize the guidance is a working document, and we greatly look forward to responding to your questions and comments, which will doubtless serve to improve it. Thank you.
Yeah, look, thanks, Alastair and Mac. That was a very high quality canter through your report, and I'm very grateful for that. That was highly insightful, and I think has raised a number of additional questions that I would like to ask you, but I'm going to play the honest facilitator here. And if we can move to the next slide, Mamouna, I think we're teeing up 4 questions, which will hopefully appear. Yes. So these 4 questions came through in advance of the webinar. We sought questions in advance, so we had some ability to select ones that we thought would be leading and interesting for the team to respond to. So let's start with the top left-hand corner about special considerations for different types of business. And you touched on this a little bit, Alastair, around SMEs and the particular needs that they have, and that's called out in the report as well. But I wonder whether you could talk both to the SME question a little bit, but also construction activities, which have a range of complexities around EPC, third-party labour, and the like, that I think also are particularly interesting at this time. So if I could just ask one of you to pick that up in the first instance.
Sure, I'll kick off on that, Mark. I mean, yes, clearly part of the approach in the guidance is recognizing differential impacts on different sectors and the corresponding risks to jobs and livelihoods. So we've identified business to consumer and service sectors, particularly those reliant on discretionary spending, companies with significant international supply chains or an export focus, construction, as you said, and SMEs. And just on SMEs, of course, they may well face greater C-19 related jobs challenges because they have more precarious cash flow, less capital, more limited management capacity around human resources, and potentially a greater reliance on informal workers or informal supply chains. Given these challenges, investors and FIs may need to provide further support. So that could take the form of basic support for business continuity and emergency response planning, including maintaining any human resource structures or management systems, linking SMEs to SME networks to share good practice and insights, or indeed more active advisory efforts, linking up SMEs to government support schemes or collaborative networks. For example, in South Africa, the South African Venture Capital Association initiative providing support to SMEs. Investors and FIs can also work on a basic communication plan, understanding that this is an incredibly challenging time for everyone, including workers, and just keeping workers up to speed with developments and creating usable channels of communication is very significant. Of course, where there are no alternatives, providing advice on forms of responsible retrenchment. Just to note, the ILO, the International Labour Organization, has recently made available a business continuity planning tool for SMEs, which is quite practical, quite useful, and that's just been adopted by the Nigerian Employers Association. When we come to construction, there are a whole series of challenges there, and my sense is we will come back to them responding to some of the other questions. So let's move on to the other questions for now.
Okay, Alastair. Let's go to the question below about vulnerable segments of the workforce, and you talked about this as well. But I wonder whether you think gig workers are vulnerable. I would think they are in most instances here, and I wonder what experiences you've had in that space in particular, but also the broader community of workers who you consider vulnerable, but gig in particular.
I mean, we know that the most vulnerable parts of the workforce are least likely to be able to benefit from existing social safety nets, are likely to be disproportionately affected by both income and employment shocks, and have the least resources to absorb those shocks. So yes, focusing on vulnerability is crucial, and also, for what it's worth, aligned with ISC PS1, which tells us to understand disproportionate impacts on vulnerable groups. We need to begin by understanding who the vulnerable segments of the workforce are. Are there additional measures needed to understand impacts, additional consultation, and how job planning can address those vulnerabilities through forms of keeping cash circulating, continued payments to contractors where we've identified that vulnerable workers are in a contracting chain, where there are migrant workers making use of employer-provided accommodation. Is it possible to maintain that in a safe and continuous fashion in terms of provision of transport or canteen facilities? But frankly, there is a tension between an approach based on vulnerability and a more commercial investor approach based on business viability, and that's acknowledged in the guidance. And this makes it all the more important to go beyond a minimum compliance approach for FIs. That may take the form of fostering linkages between highly vulnerable micro enterprises and grant-based social assistance or cash transfer programs. For investors, it may entail additional efforts to support vulnerable workers in employment and potentially make linkages to social safety nets or other labour market opportunities. I think your specific question about gig workers is, well, first of all, they won't have an employment contract. They almost certainly won't be participating in contributory social insurance systems, and therefore the vulnerability is made all the more acute. At the same time, we have seen there has been some degree of transfer to the sorts of essential services which are required, particularly around delivery services. So there is scope for innovation there and thinking positively and constructively.
Yeah, no, that piece on gig workers plays across our portfolio certainly. So we see the same opportunity in parts. Turning to the top right-hand corner. Practical. You're obviously providing a lot of support to a range of DFIs and companies now. What is the primary demand for companies that companies are calling on your services for, and where can they go for additional resources above and beyond Ergon?
I mean, it is one of the cliches of the situation we find ourselves in to emphasize the unprecedented nature, but even the best crisis response plan or business continuity plan may not have anticipated the situation we find ourselves in. So, a lot of the support is just around how, in the specific context we find ourselves now, do we respond in a thoughtful and a careful way, which will secure our future viability, and maintain compliance with national law. So, just developing human resources protocols which correspond to the current situation around alternative working arrangements, but also tricky issues like worker consent, where workers aren't physically present, or the worker's right to refuse unsafe work. Looking at scope to reduce discrimination in responses to C19. Where we see differential application of measures across the workforce, they may bring with them a discriminatory effect. Similarly, family-friendly responses to COVID-19, understanding that workers, I'm sure all of us joining this call, who have kids, have a range of paid and unpaid responsibilities, which tend to fall disproportionately on women. Also, just thinking about forms of employee communication, both from the point of view of maintaining dialogue in the workplace, but also providing real support and confidence to workers who may be very anxious. More practically thinking about elements of technology enabling, like digitization of wage payments, recognizing that physical cash itself may be a vector of transmission. The specifics around worker accommodation, and contractor management, I think we'll probably come to in a minute, and how to deal with very vulnerable groups of workers, particularly migrant workers. So, guidance for business also needs to include just an up-to-date sense of what the options are in accordance to national policies. There are wage subsidies now coming up in a range of sub-Saharan African countries as well as elsewhere, and they do open up options for business.
Yeah, no, thanks for that. It strikes me also that because of the scale of COVID and the speed at which it's affecting our markets, companies are having to think outside the box in ways that previously would be unheard of. And you've mentioned, both of you have mentioned sort of examples of that in your earlier presentation. But, the repurposing of businesses, the significant shift in thinking about who your competitors are and how you actually become collaborators in extremis. I think this is really big, very challenging at the best of times, but perhaps even more so at the moment when companies, have existential worries, and we're asking them to think, extraordinary thoughts. And I think as investors, that's something that we should all bear in mind and reflect on. But I wonder whether either of you, Mac or Alastair, have sort of experience of that, pushing the envelope of what is possible in an extraordinary time.
Yeah, I mean, I can pitch in sort of briefly, and I think, the collaboration piece is a good point, because I think for the first time ever, or certainly as far as I've been at Ergon, I mean, we're actually also seeking out options and sort of exploring where businesses can link up with sort of philanthropic initiatives and sort of, what some might call sort of a more corporate social responsibility type approach. So, there are certainly funds. I know in South Africa, we point to some examples in the guidance. There are sort of clothing retailers offering wage funds to garment workers in their supply chain. I mean, these types of collaborations are obviously unheard of under normal or difficult circumstances. So, COVID has given rise to some interesting opportunities. I think, as you sort of mentioned, there's repurposing of businesses, whether that's making hand sanitizer or masks or ventilator components or whatnot. But we've certainly been tracking examples in Latin America of, for example, food packaging companies that have asked employees to take leave or reassign workers to maintenance activities, keep them on the payroll. So it's not just about just reorienting your business production. There are productive uses of your labor force, perhaps, to maintain them. What else? I mean, I think, we've worked with an East African company that has some very simple solutions around staggered shifts in order to maintain operations and respect social distancing. I noticed sort of there was news of companies in India sort of making no layoff pledges for 90 days or whatnot to give some assurance to the workforce. I don't know, Al, if you have any other examples that come to mind. I mean, this drifts into the last question, but
Yeah, I mean, I think one of the issues we alluded to earlier is around global value chains, and I think there is a legitimate question to ask what the investor community, how the investor community can engage with off-takers. We have seen, for example, in terms of emerging practice, H&M declining to invoke force majeure and then taking delivery of already produced garments and paying for them under previously agreed payment terms. We've seen L'Oréal prioritizing immediate payments and shortening payment terms with suppliers at risk. Unilever offering early payment to vulnerable SME suppliers to assist in liquidity. Obviously, these are MNEs, but the supply chains on which they call are very much the sorts of enterprises we're discussing. The question is whether we as an investor community can engage further with the off-takers, the customer-facing part of global value chains to encourage these sorts of measures, which will be vital.
Yeah, no, thanks for that. I think we have crept into the bottom right-hand corner of the slide here in terms of your experiences of emerging good practice or emerging bad practice, I suppose, as well. I don't know whether there's other points you want to make in that space, or we can go on to some of the questions that have come through during the course of the presentation.
Why don't we address some of the other questions?
Yeah, sure. So there is one on contractors. Most of the larger portfolio companies use third-party contractors who in turn supply the labor. How should companies think about downsizing when it comes to these contractors who are likely first to be trimmed down compared to FTEs?
Look, I mean, this is a very challenging area. First of all, on definitions, IFC Performance Standard 2 on retrenchment does not strictly apply to contracted workers, although we should recall that PS1 tells us to identify and manage all relevant social and environmental risks and to look at impacts on vulnerable people. So it's certainly not the case that we can ignore these challenges. We know that the first step of any standard workforce restructuring will be to look at the peripheries of the workforce, non-renewal of fixed-term contracts, cancelling outsourced services. I suppose the issue is where labour outsourcing is absolutely central rather than peripheral to the labour supply of an enterprise. Potentially that does imply a greater responsibility. So, I mean, in practical terms, engaging with labour contractors to review their policies and procedures, the terms on which they engage workers, the extent to which these workers might be redeployed in other client companies. I suppose the fundamental shared interest here is the degree of income security afforded to the most vulnerable, and contracted outsourced workers may well fall into that category. And there is scope to go above and beyond here, at the very least, including contracted workers within the scope of job protection planning and retrenchment where unavoidable, and including contracted workers within the scope of active measures to mitigate the impacts of retrenchment, which could include support for retraining or micro-enterprise startup, making links to local employment services or social security institutions or other state or private-based initiatives.
Yeah, and actually a question's come in while you've been answering that, which is related, Alastair. So supply chains, I guess it's broadly the same mindset that you approach supply chain retrenchment.
Yeah, so I mean, again, the kind of the definitional answer is the same in as much as PS2 does not apply to supply chain work. Sorry, the PS2 provision on retrenchment does not apply to supply chain workers. But where do we see vulnerable workers globally in global value chains towards the primary processes of global value chains? I think again, maybe this corresponds to the issue I raised earlier around responsibilities of all actors in global value chains. Whether or not it's possible to encourage or to work with other actors to take greater responsibility for third parties. And what we're thinking about specifically here is finding some degree of flexibility in commercial and trade relationships around payment terms, recognizing that, as you said, this is a moment to reflect on what mutual interdependency actually means in an interconnected global economy. We need our suppliers to remain in business in order that we can return to market. Now, that may mean that we make decisions which are not necessarily reflected our direct internal cash flow priorities, and of course that depends on the balance sheet, but there is a broader and a much more fundamental question in play here, which is whether recovery on any terms similar to the previous structure is indeed feasible, and the decisions which are made now will determine that.
Yeah, no, that's interesting. We haven't got time to get into the details of that, but that question about what is the social utility of companies and investors at a time of existential crisis is I think being asked by a number of people across a number of platforms. But look, moving on to a couple of the other questions that have come in. You mentioned force majeure, but very specifically, how force majeure notifications can impact workers' rights and vulnerability. I guess this is particularly in EPC and construction, but maybe other sectors as well.
Yes, I mean, the two areas where we see this are in EPC, so major infrastructure construction projects where force majeure is called, or in supply chains. And, you know, force majeure, the effect of force majeure is essentially to dissolve existing contractual obligations, and that can have a catastrophic impact on workers in terms of transfer of funds to wages, where payments cease, and termination of employment from suspended operations. Now, the first point to make is whether or not COVID-19 actually constitutes a force majeure event is keeping our learned friends very busy right now. I think the tedious but accurate answer is it depends on the specific circumstances. Just because a company can call force majeure doesn't mean it should. And as we're discussing, the future social license to operate may be at stake. But you know, governments are acting to prevent force majeure related to COVID-19 becoming grounds for dismissal. But on the flip side, it may be that the inability of workers to be able to actually travel to a place of work is the cause of force majeure. So I think it's really a challenge. Certainly the good practice is to, as with all of the logic that we're discussing on this session, is to think very carefully about what the knock-on effects are. But to be clear, there are very significant knock-on effects of force majeure, and specifically to construction. What normally a force majeure event needs to continue for a substantial period, so 30 to 90 days, maybe longer. It may be that all parties are better served by negotiating a sort of short and long-term changes to their contracts that adapt to the new normal, rather than limiting themselves to conventional remedies, because these are frankly unconventional circumstances, and that may include, designing changes to circumvent the limitations on availability of supply, agreeing to suspend certain parts of works, collaborating on an immediate schedule of mitigation measures, and continually evolving that, because frankly the situation is changing day by day.
Yeah, no, fair point, and I'm glad that our learned colleagues are being kept busy. Look, I was trying to find a logical next step from force majeure, but I think modern slavery is going to rear its head on this. Does COVID-19 increase the risk of modern slavery, and how can investors actively manage and monitor such risks?
I might be able to pitch in sort of quickly on that one. I mean, I think the first answer I think would be sort of, does C-19 increase risk of modern slavery? The answer is probably yes, it's extremely likely. That might stem from, both employer responses to C-19 as well as government responses. Let's not forget, in terms of lockdowns or other restrictions, right? And I think it's probably crucial to sort of keep in mind that I think employer practices in particular can probably contribute to indicators either deliberately or sort of inadvertently even. So I know sort of some of our projects that we've been working on, there are cases where migrant workers are being told they can't leave the site or worker accommodation, right, for ostensibly good reasons, but obviously, that's sort of a risk factor we have to consider. On the other side, I mean, I think for some businesses where they're seeing an increase in demand, sort of in key supply chains or whatnot, I think there's probably, there has to be attention to the pressure of coercion in terms of just working hours. I think the point being that, the situation of C-19 probably, enhances vulnerabilities that were already there, right? In terms of I think it's sort of whatever the active steps or managing this risk. I mean, probably first and foremost, just having that heightened awareness of the vulnerability, sort of identifying that at an initial stage when we're doing sort of our job protection planning or whatever the case might be. So, for example, our template for the job protection plan calls out, what are the vulnerable segments of the workforce? How will they be impacted differently? How can we sort of manage these in a different way? Obviously, understanding the underlying risk indicators. Al, I don't know if you want to sort of pile on.
No, simply to reiterate what you're saying, that our sense is that potentially the current situation increases both the supply of labour at risk of exploitation and the demand, particularly where there are restrictions on movement, and we see certain sectors which are typically serviced by migrant labour.
Yeah, no, thanks for that. And of course, there is some very good guidance that you had a hand in producing a couple of years back that maps out modern slavery risks. So that may also be useful. Look, a question that's come in about tourism and hospitality. This is obviously a sector that is right in the front line of very significant job protection needs and probably some retrenchment that we can see in our portfolio. What advice, if any, do you have about that sector, recognizing it's sort of the cutting edge of where we like to see jobs under threat?
Yes, and I mean, I think recognizing that sector was the first, or one of the first, to be impacted by the knock-on effects of public health measures, and will probably be one of the, together with aviation and transport, the last which is able to recover. So the duration of the impact there will be more significant, and that puts a greater tension on what we've been presenting in this last hour, which is trying to find measures to navigate our way through in order to facilitate recovery. So I recognize that those pressures are higher. At the same time, we have seen there are examples precisely of repurposing assets, for example, making hotel facilities available to the medical infrastructure or for housing essential workers. There is scope to make use of the skills in terms of the customer skills available in that sector, either on a voluntary or other basis. But clearly there are a range of challenges there which I think are also recognised by government. And when we come to the way that this plays out in terms of job protection planning, we're absolutely clear-eyed that there needs to be an integration with the availability of alternative forms of measures, and also the amenability of investors to take a longer-term view. Thanks.
Look, I'm conscious we're coming up to the hour. Before I try and sort of draw the webinar to a close, I just wondered whether either of you have got any sort of reflections or points of emphasis that you would like to leave the audience with in terms of what they should be doing with the guidance, how they should move forward, anything that you would like just as a parting gift, if you like. Sorry, I'm springing this on you, so that's a bit unfair.
No, I think as authors of the guidance, we would very much appreciate feedback. It's intended as a working document, an interim document, and will and can be improved. I think the key thing for everybody is to begin to document and share, very practical experience to expand these range of options. And I think that's the most important thing. Also, when we're talking to our business partners, is what the shared interest we have is creating options for an agile company to be able to make the right decisions for that company. So I think also in terms of the way that we communicate this, it's very important that, of course, it's framed within a compliance framework, but what we're actually talking about is almost sort of reimagining our role, both as investors and as Mark said, the broader responsibilities of business, and that can serve us well in the future as we return to serve those communities, those customers, the other businesses and government who will remember how we've responded to this crisis. Thanks,
Alastair. I think that was a nice summation of what this report can offer us. Look, we're out of time, so I'm going to wrap up pretty quickly. Thank you very much, Alastair, Mac, and the entire Ergon team who worked on this. It's a great report. Thank you all on the line for listening in, for your questions, and please do provide feedback both on this webinar, but also provide feedback to us on what you are doing, what is working, so that we can leverage up the examples of good practice that Alastair was alluding to, because we have to learn real time here, and we can only do that if we're collaborative. So a plea to you all, please provide that feedback, and thank you for listening.
Thank you.
Thanks all.